Okay, hello. So welcome to this walkthrough. Now, this is one entry you need to learn how to really spot in the market, and then utilize it in your trading. And I tell you, it's just going to change a lot for you. Okay, so on my chart here, I have the 4 hour, the 15 minutes, and then the 1 minute. But then we're just going to use one of those charts to sort of buttress what I want to show you here. So using the 4 hour chart, so on the 4 hour chart here, you can see clearly, right, that price is sort of trending downwards since the bearish or in the bearish market. Okay, at least based on what we have here on the chart. Now, I just want to highlight, the place of patience and also expectational order flow in terms of expecting what price would do when price comes into specific POIs in the market. Now, you can see clearly from here that price first off has been trending or was trending upwards, right? You can see based on market structure here, you had highs and lows, highs and lows, highs and lows, and then that pretty much continued. And then at this point, you had this high taken out by this bullish move, and then price sort of returned and took out the low that caused that bullish run. And then that indicates that the bearish price is changing or has shifted, from a bullish trending market to now a bearish market, right? So this is the first, indication of that. And then after that, what do you expect after a break of structure? You expect that prices, after taking out this low, will pull back into the zone or probably even into the zone before continuing downwards. But then that really didn't happen in this case. So price pushed downwards, made a low here. So to pull back into and respected this bullish candle up, and then, broke down again and took out the previous low, and then price pushed up again, tried taking out this high but failed to do so, left a giant wick as you can see here, and then price pushed down and then took out this low that we have here, right? So after that, what happens next? Price then pull back up again into this sort of order flow. You can see the bearish order flow clearly here. We won't be going into details of this, but you understand what I mean. Price, after taking out this low, pushed back up a little bit into this bearish into this supply zone, and then continued downwards. Now, one thing to take note of if we zoom out is that you observe that there was a large displacement here in terms of price. This was around the 6th of January. And price left, some sort of imbalance here, right? So a lot of people call it different things, but price basically just left a lot of imbalance here. That means that after price sort of pushed violently, if I will use a word, from this zone, price didn't really return to mitigate, this zone, sort of didn't retest it, yeah. And then, so when you see this sort of bearish momentum, that simply tells us that there's every possibility the price will return to fill in the void here, the imbalance here, right? So when we see that, obviously, we're going to be trading, in direction of the trend, maybe with some counter trend, depending on structure and all of that on low time frames. But of course, the most obvious trade is to trade in the direction of the trend. So you're waiting, for price to retest highs and then you sell off, and then retest highs and then you sell off, sort of. Now, we know that when price comes into this 4R, we expect also that there's going to be some sort of reaction, and that's where I really want to emphasize what I want to draw, what I want to drive at, today, right? So let's do that. So now price sort of, this was the candle 3 p.m. on Friday. So let's just take the candle. Let's just take price back there. So by 3 p.m. on Friday already, my time, that's almost London close. So depending on structure anyways, if structure shows up, of course, before 5 p.m, uses +1, I'm going to trade it, but if not, I'm done. So this is already 3 p.m. So let's see what happens. Let's go to the 15 minutes. Okay, so now the 15 minutes, we have this. So 6:45 p.m. So let's just continue. This already late, so nothing happening. You can see nothing really is happening here. Price is just basically ranging, close of the week and all. So let's take it to Monday, 1 a.m, 2 a.m. Let's take it to around 7 a.m. Okay, 7:30 a.m. Now, by this time, of course, I'm already on the chart, right? And then I, would have analyzed the chart. I would have drawn my zones, and I would have also drawn my highs and my lows and all of that. As you can see here, we had, some little structure here. Price, if I draw this, price sort of pulled down, took out, pulled back a little bit, made a low, returned a little bit, and then made a low here, left a high, and then made a low here, and left a giant wick here, you see, and then price just started doing what? Just ranging within this area, right? So nothing really happening here. Hasn't taken out the low, hasn't taken out the high, it's just playing around basically. Okay, so here we are out now. So price is sort of here. This is 7:30 a.m. So of course I wouldn't even take any trade until 8 a.m. So I'll wait for London open before considering trades, right? So here we are. So this is 7:45 a.m. So the first we want to see after price mitigates a higher time frame, the 4 hour, for example. I trade off the 4 hour, the 15 minutes and 1 minute. I want to see a change of character, right? So So let's look at this. So here, 7:30 a.m. Okay, so we already have the change of character. As you can see, I already have the drone, of course. So this high has now been taken out by this candle, as you can see. So that's the first change of character, right? Some persons may choose to recognize this as the first change of character, this bullish candle here, right? After that's taken out, and that's perfectly okay. So when I see this, my expectation now is that price would return into the zone and then give me, that opportunity to buy upwards. Now, if you're to trade the 50 minutes, right? Now, if you've seen this change of character already, you can just simply take out your tool, and then of course you sort of put, depending on how you place your candle, so how you place your entry, you might decide to say, okay, I'm taking the maybe half of this range, the 50% level of this range, this low here, and then this low that was taken out, this high, and then this low. Take the 50% mark, and then put your entry there and put your low below this guy here, because you know that you've seen a change of character and you've mitigated the 4-hour POI, you've mitigated the internal refined 15 minutes POI. Now you expect price to sort of react to that and then give you an entry. So if you're trading 15 minutes, this is sufficient to say, I'm going to just take this, and then what are you going to target, right? Now you see we'll be making series of high lows. So all of this area here, liquidity just lies around there. So if you're going to take the swing, this was the low that caused price pullback before pulling down and then giving us this low here. So you're going to take the swing, you can simply just enter here and put your entry here. So that will be a good 1 to 6, right? But of course, you must have patience. Now, this is, of course, also risky because price can decide to just completely blow through, your stop loss and sort of mitigate, the 4-hour POI deeper before even change of character. So just waiting for a chalk alone, it's risky. It's a risk entry, right? But of course, if you have proper money management and risk management, that shouldn't be an issue at all. And if you've tested it anyways and it works for you, why not? So you have a good 1 to 6 here. But for us, we're interested in entering in the 1 minute. So we wouldn't just enter here. We can actually do that, but let's just leave that and see. So with this, after the chalk already, with this candle that pull back, you can see that we're already in a trade, right? You can see that right by 8:30. So let's just leave that. Let's assume that this is an entry that we had on the 15 minutes, okay? So let's just have that there. Now, but we're really interested in trading the 1 minute. So we want price to sort of retest our POI, and then after price has done that, then we can now, look for further entries. Now, for some people, this change of character may not be sufficient. Some persons may want to see this high taken out first before they even consider entry, and that's perfectly okay. Now, depending on how you've tested the market and you know that it works for you, you can actually just sort of do your thing. Okay, so now what do we do? So we'll wait for the market to give us an entry. So let's see what happens. So let's play 15 minutes. Cool. So just taking off, it has of course change of character, just taking off from here, and then let's see what happens. 9 a.m. Now, just before I continue, now this is a 15-minute entry, but let's assume we wanted to refine this. Okay, now you'll notice something here, that we have something interesting here I want to highlight. Now you can see here that this candle, let me just take this guy off. Now this candle here actually swept the low of this candle. You see that, right? This candle left a wick that swept the low of this previous bullish candle. Now that is a sweep of liquidity. Now after price sort of broke through this high, right, this new high that was created by this move here, now we expect that price will pull back a little bit into the zone that swept liquidity. That's this zone here that swept the low of this candle, that swept liquidity before continuing, and we can actually use that to enter the market, right, to enter a trade. So if we do that and we go to the 1 minute, let's go to 1 minute. Okay, so here on the 1 minute, I already have some of these things mapped out. So on the 1 minute, something interesting to pay attention here is after price, this was the change of character on the 15 minutes. Price broke through, returned to test the 15 minutes POI, and now what happens? We now have, if you look at this, we have structure on the 1 minute. This was the high. Price pulled into the 15 minutes POI, rejected it, came here, rejected, the supply zone was in control, pushed price down a little bit, and then price broke through, right? So this is basically the structure. Now with this, we know that price has shown an indication that it wants to continue upward. So we can actually decide also to enter the 1 minute here. You can draw your fib tool from the low of this candle rejection from this zone to the high of the rejection. So you can either decide to enter the 15 minute at the 50% mark, right, or at the the distal, depending on what you call it, or even at this point here where price sort of took out this high. So you can decide to actually enter there. So but for just the purposes of this, so let's just put our entry here. Now you can decide to put your low here, right, your stop loss here, but mind you, price can actually just come and weak through your stop loss, right? So you can decide to just use this as your entry confirmation to now maybe place your stop loss maybe around here, around this previous low here, this previous guy. Now these are all just risk management, or entry methodologies you could use to sort of enter the market. You can enter on the 15 minutes, that's about 10 pips. You can enter, using 8 pips after using the confirmation the 1 minute, and using the, the very large stop loss to sort of protect yourself. You can do that if you want to and all, and you'll be fine, right? So these are all potential entries that you can have. So with this, let's target again 1 to 5, right? This would be 1 to 5 around here. Okay, cool. So you can see the difference. So on the 15 minutes, we had this 10 pips, and then 1 to 5. Did I increase that? 1 to 5 will be around here. Almost the same. Interesting, right? Okay, so 1 to 5, 1 to 5. Okay, so we're already, of course, in this particular 15 minutes trade, and then you'll have another entry here. So hopefully we don't get stopped out, right? So yeah, so let's see how price continues to play out. This is what time? 9:05. So let me just play this candle fast. Oops, I'm gonna take us out. Okay, lucky us. Okay, let's drag this across. Okay, let's see. All right, price is moving out. Cool. This is now London session. Of course, it's we're off London session already. I'm heading towards New York session. So it's going to be a long trade. So 12:45. Now let's go to the 15 minutes. Let's just go to 15-minute track there. So 12. Okay, so we've entered 2 trades, right? 2 positions. Now depending on the risk you use, of course you may not necessarily enter 2 positions at a time, but let's see what we have. So this is a 15 minutes entry that we had around here. So let's have that there. Okay, so let's see. Now something interesting also has happened here. So if you look at this now, you can see here that we have, look at this, we have some structure here. So price sort of broke through this high, retested this 15 minutes POI, okay, and then within this zone here, if I should expand this, you see here that this low, this candle low was taken out by this candle, right? This candle took out the low of this candle, and that's a sweep of liquidity before price sort of broke through that high. Okay, so with this now, this is giving us another zone, another POI that we can actually expect price to come into before continuing upwards. Okay, we've seen a sweep of liquidity. It increases, the confluence that we need to sort of expect that POI is going to hold. So we expect that price will come back in here, and then we'll look for another opportunity, and let's see what happens. Okay, so let's see this. Oops, okay, this is 215, and price has mitigated, this 15 minutes POI. So what are we interested in now? We know now, let's look at the big picture. We know that price has been selling off. Okay, we know that price has mitigated the 4-hour POI. We know the price has mitigated the 15 minutes refined POI, and we've seen a chalk, rather a bullish chalk, and even a bullish break of structure, as you can see here. Now we know that there's a lot of liquidity lying around all these areas because the market has been selling off all this while. So our expectation is that the market now, when it reverses, would at least clear all of this liquidity, and there's nothing stopping it. So, and that's why we're, our expectation is that the market would be bullish based on all of these confluences, that we're seeing. So let's do this. So now prices come into this zone. You know why this POI, of course, is strong. I've explained that, right? Sweep of liquidity. So we trust this POI in a way. So let's go to 1 minute and see if we get an entry. Yeah, so on the 1 minute, okay. Oops. Yeah, so I already have this drawn up, right? But I'm going to explain how and the why, of course. Explain the why of the trade. So here we've retested this 15-minute zone. Okay, this was the point where price actually first retested it. Let me just take that back there. Now, when price retested this, we now expect that what's going to happen? That price will give us structure on the 1 minute, and then we'll continue to trade the bullish trend, right? The bullish reversal. So let's see what happens to 12 p.m. Okay, nothing. So price made a high and then took out this low, as you can see. So this is our new high here. So let's see what the price does again. Okay, price comes into this zone, rejects it, tried to take out the high, but failed to do so. So we're waiting for price to actually take out that high to show some confirmation that this zone is actually going to hold. Cool. And now we have what we need. Now you can see here from this candle, this last high, that price sort of sold off into the zone again, and then tried to break through, but then failed to do so, and then pull back a little bit, and then now we have that break off the high, right? A change of character by the week. And I'm willing, of course, to take trades on the 1 minute. If I just say week, a change of character by the week, and that's sufficient, right? So now, but this, broke, took out that high, but also left a giant, wick for us down here. We did not take out this, which is perfectly good. So now, even if it did anyways, it's still perfect, because that would be a good sweep of liquidity, adding to our confluence that that area, or that demand zone is actually going to start. So with this, now we pull our fib tool. As you can see, I already have that here. Let me take this guy out. I already have that there. So you have the fib tool. Okay, so we take it from the high of the rejection to the low of this rejection. So we'll have that there like that. Now we have two options to enter. You can decide, you have multiple options. Let me just say two options. Now you can decide to enter here 15 at the 50 mark of the fib tool, right, at the 50% mark. But mind you, price can just decide to pull back a little bit, and then off it goes without tapping you in. And that would be sad, because you've spent all this time waiting for price and then you're not taking it. So for me, I'll actually put it here at the distal. Okay, and the reason for this is simply I don't want to live with price waiting all this time doing all of this analysis, and then the time for entry comes, and then I just waste it, because I want to get a high risk to reward. So I know that I will still get what I want. So let's say 1 to 5, which is almost standard for me. So 1 to 5, right? So let's see what happens. Okay, so after this candle, let's see if we get an entry. Okay, cool, we have an entry, and then that's it, we're in. Perfect. Okay, price is pushing out, pushing up, and there we go. Okay, almost, and there we go, and that is it. 1 to 5. Now mind you, we're still in a trade, yeah, from London session. As you can see here, we still have this trade from London session. 1 to 5, 1 to 5. Already in the New York session, we've got to 1 to 5, because our our risk, or rather our stop loss was much smaller, 4.7 compared to 10, and then 8. Yeah, right. So we're still in this trade. Hopefully this also plays out. Okay, so with this now, we can extend this guy here, and then see at one point this trade actually plays out. Okay, almost there. Price is reversing. Okay, and that's it. Yep, and that's it. Yeah, so at this point, all our trades, our TPs have been hit. So 5, 5, and 5. So depending on what you're risking, you know what the outcome would be. And this is literally how you can trade, this strategy, right? It's quite simple. It's simple, right, in theory, but it does take a lot of practice to really nail this in the board, and then understand how this works, and then a ton of patience to actually wait for this setup, right? To wait for this setup, and then actually carry out the analysis, and not wishing. You're not wishing for price to do what you wanted to do. You're simply following the market. You're simply following price action. Okay, so well, I want to believe you've actually taken a ton of lessons from this. If you haven't subscribed, please hit the subscribe button. Your subscription or your like, your comments, helps to sort of boost the YouTube algorithm, and also to allow other people to really watch this video and also benefit from this video. So please, if you haven't done that, please hit the subscribe button. So I want to believe you've taken a ton of lessons from this, and also we have a lot of free resources for you in the description section. You can just check there, and also the course, of course, for ParutoCapital will be launching soon. If at the time of watching this video, that's if the course hasn't launched already, and you can join the community, and then you can really benefit from a ton of knowledge and a ton of experience that we bring daily to the market. So thank you so much for your time, and thank you so much for watching the video. I wish you all the best, and I look forward to connecting with you some other time. Cheers. Bye.